Have you ever wondered what would happen if the World S factory suddenly decided to change its game plan? Well, that's not a hypothetical anymore. China is making a massive move and it's sending shockwaves across the globe. This isn't just another headline, it's a fundamental shift that could reshape everything we know about global markets, supply chains, and even the phone in your pocket. Stick with me, because what I'm about to reveal is something every investor, business owner, and consumer needs to understand. For decades, China has been the undisputed champion of manufacturing. They built their economic miracle on a simple but powerful formula: cheap labor, massive scale, and a relentless focus on export. The result? Made in China became the most common label on the planet. This model pulled hundreds of millions out of poverty and fueled global consumption with affordable goods. We all benefited from it. Cheaper electronics, cheaper clothes, cheaper everything. Companies, especially in the West, grew fat and happy, outsourcing their production to China and watching their profit margins soar. It seemed like a perfect system, a win-win for everyone. But here's the thing about perfect systems: they rarely last forever. And now the ground is shifting beneath our feet. China is moving, but where is it moving to, and why now? The answer lies in a grand strategy called Stay Made in China 2025. This is not just a policy paper, it's a declaration of intent. China is no longer content with being the world's workshop for low-end goods. They're aiming for the crown. They want to dominate high-tech industries: robotics, artificial intelligence, electric vehicles, aerospace, and biotechnology. They're transitioning from a low-cost producer to a high-value innovator. Think about it this way. They're moving from assembling iPhones to designing the next generation of smartphones. They're going from making plastic toys to building the advanced robots that make those toys. This is a monumental pivot. To achieve this, Beijing is pouring hundreds of billions of dollars into research and development, subsidizing key industries and nurturing a new generation of tech giants. They're not just trying to catch up, they're aiming to leapfrog the West. So why the sudden urgency? It's a mix of internal pressures and external threats. Internally, China's labor costs are rising. The demographic dividend that fueled its growth is fading. Relying on cheap labor is no longer a sustainable long-term strategy. They need to move up the value chain to keep their economy growing and their people employed in better-paying jobs. For investors, China's pivot creates both immense risks and incredible opportunities. The risk is obvious. If you're invested in companies that are heavily reliant on the old model of Chinese manufacturing, you could be in for a rough ride. Their costs are going up, and their supply chains are in disarray. But the opportunity is equally massive. The companies and countries that will benefit from this global reshuffle are the next big investment plays. Think about the infrastructure needed in Vietnam or Mexico to support new factories. Think about the logistics companies that will manage these new, more complex supply chains. And most importantly, think about China's own high-tech champions. As China pours money into its domestic tech sector, new giants will emerge. These could be the next Huawei, the next Alibaba, or the next Tencent. For savvy investors who can identify these winners early on, the returns could be astronomical. We're talking about a fundamental reweighting of global economic power, but this isn't just a story about money and markets. It's about a new form of competition. We're seeing the creation of two parallel tech ecosystems, one aligned with the US and one with China. Countries and companies are increasingly being forced to choose a side. Can you use American software with Chinese hardware? Can your data be stored on servers in both countries? These are the questions that are keeping CEOs and policymakers up at night. The digital Iron Curtain is slowly descending, and it will redefine global business for decades to come. So what does this all mean for you? First, be prepared for more volatility.